good afternoon. You're watching ET Now, and the last 1 hour as we're starting with the trading session today, we have a good recovery at our hands. In fact, the Nifty has moved into the green, 22,400 being scaled on the Nifty. Almost a 200-point recovery coming in on an intraday basis. Nifty Bank was, as it is, fairly charged up. It was outperforming from the word go. That index has managed to add 550 points for itself. And the mid-cap and the small-cap index, where the large part of the focus was today, have also managed to catch up. Yes, they have caught up, but they're still firmly in the red. Look at the small cap index down around 2%, mid cap index too down about 1%. But from the lows of the sessions, things have turned a bit. Even if you look at the advanced decline ratio, it's firmly tilted towards declines. The last time I checked, only a few handful of stocks were actually in the green, while the advanced decline ratio was firmly tilted towards decline. And that's the pie for you on the screen. There's a large chunk of red versus the green. Having said that, there are certain segments like banking which are outperforming, and certain pockets like City Gas Distribution, the likes of MGL, IGL, NBFCs, the likes of AB Capital, L&T Finance, IFL Finance, as well as JM Financial, which are coming under pressure. The two stocks that I wanted to begin the discussion with are Pidilite, that's sitting with a gain of around 4%, so good charged up move near the record high levels. And then Tata Chemicals, 2 day on the trot. That stock has been doing phenomenally well for itself. Yesterday the stock was up around 6 to 7%. Today it's up around 9 to 10%. So good rally at hands. Ajay, Aisha, good afternoon. Looks like the market is in a good mood, at least by the end of the trading session.
Actually not, I think the distinction is getting only evident more so as the days go by in the market, wherein you always debating whether the small and mid caps were overheated, and I think that part is now playing out, because if you just look at what the small cap index and the mid cap index has done, while they may have recovered from their intraday lows, but the weakness in that end of the market is clearly evident. It's the Nifty, and that too not pretty much an across the board move, but the private banks, the ones which have not participated so far in the rally, and I guess that's kind of a pair trade between NBFCs vis-a-vis the private banks, which is clearly playing out, because if you see the Nifty move today, it's purely led by the private banking names.
Actually, it was the classic case of shakeout, I would say.
Yeah.
I mean, last 3 days back, AMFI, SEBI nudging, calling small cap, mid cap frothy, and then the regulatory action. And if you see, it's the small and mid NBFC which got completely beaten out of shape today. So clearly a case of shakeout, and look at that Nifty back to all-time highs, while mid-cap, small-cap. In fact, Kunal was just telling me that the small-cap index is down almost 10% from recent highs. So it's been kind of melting in the last 2 weeks. The second half of February onwards, it peaked out and is on the downside. But on declines, there is definitely buying coming in. Advanced decline is pretty severe, 5:1. So that tells you that broader market is not rebounding in the same light as the larger stocks. Let's take the discussion forward. Jonathan Sheasel is joining us now, the Deputy CIO at Westminster's Asset Management. Jonathan, afternoon. Thank you so much for your time. How do you see this shakeout of the broader markets, regulatory nudge, the SEBI, AMFI calling it frothy, the broader markets, and then of course the valuations which were kind of ahead or higher than the long-term averages? I think it's a welcome. Do you think it's a welcome correction which is playing out?
Yeah, I think as you mentioned, it's been, I guess, long coming. A lot of people have been suggesting the small mid caps have obviously performed extremely well, and as you mentioned, valuations are certainly no longer cheap. So I think a correction was certainly probably overdue in that space. And then obviously we've seen some of the larger cap indices, the Nifty, as you mentioned, being a new all-time high today. I guess that's also a reflection, a bit of switching out of the small mid caps into the large caps, but also I guess foreign money, index money continues to, I guess, push up a little bit into the larger cap stuff as well.
Point is taken, but let me bring Naresh as well as Kunal into the conversation. Kunal, you were putting it very aptly that the index might be at record high, gold, Bitcoin, etc. might be at record high, but portfolios are not. And that's all thanks to the kind of corrections that we are seeing in the broader markets.
Well, yes, and adding to the point which Ajay made, that the advanced decline ratio is 1:5. In the morning it is 1:10. So if 1:5 was bad, then 1:10 was very bad. But then I think it's been a good recovery so far on an intraday basis. So yes, it was a classic vibrant shakeout for the markets as such. But the Bank Nifty particularly had been doing pretty well throughout the trading session. We are now just 500 points or maybe 600 points away from the Bank Nifty hitting a fresh life high for itself. And the more important part for the Bank Nifty when we look at the charts is that the gap which had been created on 16th of Jan for the Bank Nifty, when HDFC Bank had fallen by more than 10% on a single day, that gap has been filled today by the Bank Nifty. So I think that's a very strong indication that we are now looking at a strong possibility of the Bank Nifty making a new high and crossing above that 48,600 mark.
Okay, that's the take coming in on what the banks are overall doing. But Kunal, within banks, and I'm just going to pick up, the private banking pack here. While HDFC Bank yesterday as well moved 0.5%, today it's another 0.5%. ICICI Bank, Kotak, Axis, they are the ones which are charging up ahead. If you had to initiate a fresh long on a specific private banking names, the large caps, which one would it be?
So ICICI Bank is something which I've been bullish on. I think the stock is due for at least another 40 to 50 points on the upside. 1140 to 1150 on the spot levels is where I would expect the stock to at least get into a first level of resistance for itself. IndusInd Bank is also popping up on the chart in terms of a fresh breakout. So after almost 2 months of a 300 or 400 point correction for IndusInd Bank, then the stock consolidating under 1300, 1330 mark, and then now picking up pace again, coming back about that 1500 levels, indicates a two-stage of a classic correction and a sideways consolidation is over. So looks attractive over here. PSU banking lot, I think still look very attractive. Bank of Baroda, I think Canara Bank, etc. They are making fresh highs for themselves. So that's another pocket which looks attractive. I would probably want to concentrate more onto these few large cap names and few of these other PSU names.
Okay, actually, let me bring Naresh also into the conversation. Naresh, we're doing some interesting study on the difference between a shakeout, a correction, and a crash. Where are we with things when it comes to the broader market right now?
So if we look at the BSE small cap index, we made a top around 46,800 levels roughly, and we came down towards 43,400, 43,800 today. The previous lows are around 43,200 to 42,800. So we've just not even corrected 10% from the top. We are down 5-7% from the top. And moment we start breaking those levels, that is where the shakeout becomes a correction, and we could go towards a 12 to 15% drop. But as of now, we are still away from it. And there is a good possibility that we could get into a consolidation mode for the small caps, wherein we do not cross the recent highs very quickly, nor break the recent swing lows. So for now, it's a shakeout followed by a consolidation ideally. And we've seen there have been multiple shakeouts over the last 6 months, wherein we dropped 3-4% on the small cap index and recovered sharply over the next 2 sessions. But today, we've not seen a very strong recovery, even though the Bank Nifty, the Nifty has recovered back almost towards all-time highs for the Nifty. So this indicates we are possibly getting into a period where the small caps gets into a sideways mode, and we see action more on the large caps.
And I was just looking at some of the losers list since mid-Feb when mid-cap, small-cap actually peaked out. The names which stand out are some of the PSUs. In fact, those including some PSUs which are putting out good numbers and good narrative for the next few quarters. Would you be interested in buying some of these beaten down Indian PSUs in this corrective phase? Jonathan? Jonathan, can you hear me? Okay, Jonathan cannot hear me. We'll just rectify that issue. But Naresh, since this shakeout is happening, this PSU pocket is participating in this one. Which are 2-3 names which you would be keen if they fall off, say, 20-30% from recent tops?
So ideally, you would not be looking at stocks which would fall 20-30%, and they would go, because after such a fall, we tend to go sideways. But I would be looking out for names which have not really gone up massively. So in that, Container Corporation is one which has not gone up massively after that breakout of 800, 850 and has been consolidating well. So that is one stock. Even at current levels, SBI still may have much more legs compared to what has happened with the rest of the PSU banking names. So for now, my top pick out of the PSUs would be Container Corporation.
Can you hear me now? Jonathan?
Hi.
Yeah, so as you know that IFL is in the eye of the storm right now. You have, worked closely with them. Not that I'm asking this question solely because of this, but as a market observer, a good quality management may have erred on the side of processes and hence the rap on the knuckles from the regulator. But would you be a buyer of, if the stock continues to fall from here on? We have seen some clarifications from top management that remedial action is already underway.
Yeah, sorry about that earlier. Yes, it's obviously they've got a good franchise. When you have a business which has a good franchise and generally an interesting product or service, and an issue like this arises, I think an investor does have to be careful because these problems can carry on for a little while. Generally speaking, when we have in the past owned a business where there has been some sort of regulatory issue, there's two ways you can react to it. You can immediately sell and reappraise after you've got some more information, or you can just try and sort of live with it and just work through the volatility. The Indian market, where we haven't had that experience for investments within the Indian market, but we've had experiences like that outside of India, where generally we're a bit quicker to exit the position. Until the uncertainty is resolved. These things can carry on for some time. Seeing how management react to the regulatory news is extremely important, I think, for investors. And yeah, it's one where generally we place a lot of work on governance and how companies operate from that perspective. And if there are any doubts around that, it does make us very concerned, and we would generally look to see some reassurance from management on these factors. Of course, quite often it turns out that the issues or perceived issues are dealt with very rapidly, and then things carry on back to normal. But obviously, just in summary, I think it does. There is some caution that comes from these sort of events. But yeah, I need a bit more time to assess what the overall impact.
Makes sense. In fact, we're going to take a very quick break on that one. And since we're on the subject, IIFL Finance is going to comply with RBI concerns by the 31st of March. That's the word on record coming in from the chairman, A.K. Purwar himself. Let's hear out a slice of his exclusive chat with us.
The damage will definitely be there because almost 30% of our businesses now we are stopping not doing. So damage will be there, but I expect this damage to be temporary. I expect that we are making efforts to come back on rails as fast and as quickly as possible. I expect that maybe 2 months, maybe 3 months, we are able to convince RBI if they are comfortable with whatever remedial action we have taken, and they carry out a special audit as early and as quickly as possible, then we should be come back on rails very fast.
Right.
But our IT advantage would ensure that the high growth trajectory which our company has followed so far would not be allowed to go away. If we come back on rails quickly, there would be any negative fall by March 25. We will continue to maintain the present market share, hopefully.
Okay, that's interesting.
Well, while the index is scaling at an all-time peak, the Nifty as well as the Sensex soaring high, pushed higher by the private banking names. That's not quite the fate with the mid and the small cap index. Well, the one space which continues extremely buoyant is the entire primary market, and Tata Sons is looking at listing on the exchanges over the next 1.5 years. My colleague Samit is here with all the details on what exactly is the process going to be, what companies come under Tata Sons, and how big the IPO is going to be.
Well, if you see the Tata Sons IPO, that is expected to start in the next 1.5 years. But despite that fact, a lot of Tata Group companies have been buzzing in trade, especially Tata Chemicals. If you see, it has been gaining for the last 2 consecutive sessions. And the reason behind this, one of the reasons at least could be the Tata Sons IPO. Now, how can the Tata Sons IPO actually benefit Tata Chemical? For that, first, let's look at the Tata Sons shareholding pattern. Now, in that, if you see, the Dorabji Tata Trust, Ratan Tata Trust and other promoter trusts own close to 66% stake. Apart Apart from that, there is Sterling Investment and Cyrus Investment, which own close to around 18% stake. Then there are 4 listed Tata Group companies, that is Tata Motors, Tata Chemicals, Tata Power and Indian Hotels, which also own stake in Tata Sons. Now, Tata Motors and Tata Chemical own around 3% stake, Tata Power owns around 2% stake, and Indian Hotels owns around 1% stake. Now, the market value of the listed entities of Tata Sons is close to around 16 lakh crore. Apart from that, if you see, the street is valuing around 1 to 1.5 lakh crore for its unlisted investments and step-down subsidiaries. So, if you see the total valuation of Tata Sons could be around 17 to 17.5 lakh crore. Now, given the fact that Tata Sons is a holding company, there will be a holding company discount that will be applicable. Now, if the holding company discount stands at around 30%, then the actual value of Tata Sons on listing could be around 12.6 lakh crore rupees. And if the holding company discount is at around 60%, then the value of Tata Sons on listing could be around 7.8 lakh crore rupees. Now, even if we assume a 60% holding company discount, which means that Tata Sons value would be around 7.8 lakh crore rupees. Now, this means that the 3% stake that Tata Chemical owns in Tata Sons is valued at close to 20,000 crore rupees, which is nearly 80% of its current market capitalization of close to 25,000 crore rupees. In case of Tata Power, if you see, nearly 21% of its market cap is equal to its stake value in Tata Sons, and in Tata Motors it's around 16%, and in case of Indian Hotels it's around 19%. Now, do remember, this is assuming a 60% holding company discount. If the holding company discount is on the lower side, then the value of this stake could well be higher for these 4 listed Tata Group companies, and this could be one of the reasons why Tata Chemical has been buzzing in trade for the last couple of days.
One of the reasons, though, because we understand that the Tata Chemical management right now is in US doing a roadshow, and ever since they actually declared or discussed their EV chemical or renewable side plans, market has got mighty interested in that one. But there are other chemical related stocks which are in EV, like Gujarat Fluoro, have been spoken about it. Anything in the specialty chemical space, Jonathan, which you like? Do you think the time has come for high margin performance chemical names to start doing well?
Yeah, I think India offers some very interesting specialty chemical companies, listed companies. Currently, we don't have any play in that sort of area. Previously, I have owned some exposure a few years back. But yeah, currently we don't. Obviously, there is an element of cyclicality around that space, which we tend to avoid in our new process. But as I said, there are some very good names there. But yeah, we haven't got anything specific. Obviously, the whole EV story, in some sectors, some sections of that story is quite pressured at the moment, with some of the raw material prices coming off, and clearly a bit of overcapacity coming in place, certainly within mainland China as well. So it's a very good growth story, I think, the EV side for the specialty chemicals, but it's also one that's under a little bit of pressure in certain sections at the moment.
All right, Jonathan, we'll let you go on that one. Thanks so much for joining us. In fact, since we are talking about stocks, NBCC, that's one infrastructure stock which should be in focus. My colleague will also join us very shortly. We broke the story earlier in the day that there could be a big project which could be coming to NBCC as far as other state governments are concerned, and many of the PSUs who are sitting on a massive land bank is concerned. Prakash is here with us with more on that. Prakash, tell us.
Yes, we are learning from our sources that the NBCC has prepared a mega plan to monetize land assets of various PSUs. We are given to understand that the company is under active discussion with various PSUs to monetize their land assets. That includes companies like ITA, Prasar Bharti, MTNL, BSNL, BHEL, ITA, among others. So we are given to understand that the NBCC to monetize land assets of around 3,000 acres of Prasar Bharti, around 10,000 acres of BSNL, 380 acres of ITA, among others. And MOUs with some of the PSUs will be signed within the next 2 months. Sources are informing that around 1 lakh acres of land assets that is associated with PSUs will be developed by NBCC going forward, and company is under active discussion with various public sector undertakings. Along with that, these land assets will be developed under various segments, like for commercial purpose, for some of the land parcels will be developed for housing requirements. Along with that, NBCC will redevelop some of the land parcels for the company's own use. Sources also saying that the company is also under active discussion with the various state governments for the construction of mega warehousing complexes in order to provide better pricing freedom to the farmers.
Thanks, Prakash, for that. In the meantime, of course, the Nifty is sitting at fresh record high levels. Ditto can be said for Sensex as well. We are comfortably above the 22,450 mark. Time now to slip into a very short break. When we come back, we'll track the last 30 minutes of the trading session. And then, of course, the big interview lined up for you at 3:30 p.m. You don't want to miss this one. It's, of course, the biggest interview in town. And that's the RBI Governor exclusively speaking with ET Now's Editor-in-Chief, Nikunj Dalmia. So, just watch out for that 3:30 interview as well. But time now to slip into a very short break. Welcome back. Well, for the markets, we're holding strong. Nothing much to complain if at least you're looking at the index level. But if you're looking at your portfolios and the kind of cashes that we're seeing in the mid-cap and small-cap space, then you'll be a tad bit worried as to what's happening. But in terms of the individual names, there is a bit of a recovery as far as JM Financial is concerned. Remember, at one point of time, that stock was locked in lower circuit. It's actually managed to show a meaningful recovery now. It's down only 12%. And in context of the earlier 20% cut, 12 is better than that. So, other than that, you also have Capri Global, which is down 14%, Force Motors, L&T Finance Holdings, and a lot more names are actually in the red, while Pidilite is up 5%, and Varun Beverages too has managed to perk up, and even Max Healthcare, after that entire dropping of the hospital sector, has managed to come back a bit. But Vineet Bulinchka joins us on the show as well. Vineet, the entire talk of the town has now tilted towards, NBFC versus banks, and the kind of hawkeye that RBI has at this point of time on NBFCs. Maybe the banks are better placed, or I don't know, the banks are maybe next in the order. What's your view on it, banks versus NBFCs?
So I believe that, first the PSUs took the drubbing for almost a decade. Then, we had HDFC Bank going through a kind of a course correction. They had some issues. Then we had the NBFCs taking a drubbing. And in this entire mala, I think that the PSU banks are well placed to monetize this. And we will see more flows come in because, they're absolutely geared with what the government wants, is that they want the regulated entities to follow due procedure. And that is what the PSU banks are doing ever since they're on the recovery front. So I believe that we will see less, regulatory disciplinary moves against the PSU banks, and hence they seem to be best placed to benefit from this.
Okay, that's the take coming in right now. While the Sensex has managed to scale up higher and it's now crossed that 74,000 mark. Tata Chemicals, Pidilite, Kotak Bank, OFSS, these are your big performers from within the liquid universe. And of course, within the Nifty, it's really the magic of private banks, which is holding it up. Axis higher by about 2%. You've got ICICI Bank scaling higher by about 1%. HDFC Bank as well, 0.5% or so higher. Can't say the same about PSBs though today. SBI is at best just very, very tempered. Reliance as well, pretty quiet as we speak right now. So maybe now it's picked up a little bit in the green as we speak, just marginally so actually. Not such the best day for an UltraTech, for an ONGC, Tata Steel, Maruti, even Tata Motors is a little bit soft in trade. And then Adani Enterprises is the one which is down about a good 2.5% as we speak right now. But Vinit, would you have any buy ideas in this market, or would you say keep the powder dry, sit on the cash for when there is any volatility that kicks in, one would find opportunities?
So while we do have buy ideas, I still think that, there's a lot of poison that is brewing in the system which needs to be curtailed. And that is, we are going to see a lot of SME stocks come under pressure. That is going to have a bearing on the small and mid caps. And as you know, I always say March end is the time to buy. So around March 20th to March 30th is when you will get some very, very juicy valuations on all your stock picks. And that is when you should keep the powder dry for.
The powder try and wait for those dips and buying opportunities. But in the meantime, what are the FIIs and the large institutions looking at buying? That's something our colleague Sharad will tell us in this dealing room link. Hi, Sharad.
The dealer chatter room is coming for dollar industries, and over here the dealers are stating that long only fund buying has been seen for the last two trading session, and today also an important chunk was bought by a long only fund. Now importantly, roughly 7 lakh shares have been acquired, which translates into roughly 1% stake in the company, and importantly the volumes have also picked up almost 3 times its 20-day average. Now interestingly, we did check the shareholding pattern, and this company is grossly under-owned when it comes to the FI as well as mutual funds, where the combined stake is less than 1%. So this might be a significant move, as a long-only fund is said to have entered the company. Apart from this, also importantly, ace investor Ajay Upadhyay has almost 1.06% stake in the company, and we did do a research in the Q3 numbers, and the company stood out amongst its peers as well. And also a key re-rating trigger as per analysts is that there is a changes happening in the distribution system as well as the inventory management under the Project Lakshya. So that's why dollar industries is in focus, as institutional interest is gaining interest on this stock.
Okay, we'll leave it at that. In the meantime, let me take it across to Ansh and find out what are some of the volume buzzers in trade.
Right, so L&T Finance Holding will be the first stock in focus here, because the stock has faced significant downward pressure today. If you can see the chart, stock gave a decisive breakdown from its channel pattern, registering its biggest single session decline in over 2 years. The stock even slipped below its 50 DMA, along with heavy volume of over 7 times its 10 session average trading volume. Apart from this, Mahanagar Gas will also be in focus, as the stock has given a breakdown from its horizontal support trend line, registering its biggest single session decline in almost 4 years. There was a strong participation in the fall, with the volume of over 20 times its 10 session average trading volume. The stock even slipped below its 20 DMA, hitting a 1-month low level. Lastly, let's focus on some Nifty bank stock as well, because today is the weekly option expiry. So we have chosen Kotak Bank in this list. If you can see the chart, stock has given a breakout from its cup and handle chart pattern, and it has also surpassed above its 20 DMA. Here as well, the move was supported with good volume of around 1.4 times its 10 session average trading volume. So those were the breakout stocks based on price volume action.
Thanks, Ansh, for putting those interesting charts up for us. So L&T Finance, Kotak, some of these names are definitely in focus, and dollar industries that my colleague Sharad was pointing out. Let's pull up the intraday chart of that one. That stock is also sitting at a gain of around 6%. So clearly that long only fund buying is aiding the sentiment on that one. But just coming back to you, Vineet, the kind of move that we're seeing on Tata Chemicals for the last couple of days, do you think this is purely on account of that entire build up towards the Tata Sons IPO, or there's something fundamental at play here as well, their own chemical business improving?
Yeah, so it's a combination of all these things. The underlying business is very strong, strong cash flow generating, large assets, global business, and you also have the value unlocking coming in from the Tata Sons placement. And the third thing is also the some noises that they keep on making on the battery side. That plays very positively for the company. And, I think, it is at an inflection point, and from here the stock can start moving up quite aggressive.
To what levels? Any specific levels in mind that you have in it for us?
So, I think a good 15 to 20% upside in the short run seems to be quite likely.
Go with that view, 10 to 15% on Tata Chemicals in the short run itself? Naresh, the question is for you on Tata Chemicals.
So Tata Chemicals in the near term has given a breakout. It was a recommendation 2 days back. The volumes are the case which makes it very interesting. The last 2 days volumes are almost 10x the general volume. So in that case, it could surprise on the upside. Any dip should be a buying opportunity, but doubt it would go back to the levels where you want a good entry point.
Okay, in the meantime, the power of diversification in technology, the role of private sector players in the space ecosystem, what's going to be the next, a leg up for Indian startups? Those are some of the questions that IT Minister Rajiv Chandrasekhar and the ISRO Chairman S. Somnath took up. And let's hear out a slice of that chat.
Today, looking forward, performance is going to come from semiconductor in terms of process. It is going to come from semiconductor design. It is going to come from system design, optimization, and like a reset and redrawing, and also for software. So that whole performance stack and the application stack has been almost reinvented. So if you look at the next wave of startups in this context, that's why I wanted to set the context. We are going to now see, of course, ITS will continue. We will continue to be the back office of the world. Of course, our presence on the consumer internet will continue. But in these new areas where CPUs are being replaced with GPUs and GPUs are being replaced with AI-specific compute, and we are increasingly cloudifying the whole ecosystem, digital ecosystem, you will see that the opportunities are in system design, whether it's for space, whether it's for compute, whether it's for automotive, it is for device design, it is for app platforms that use AI to basically do more with less. So AI, semiconductors, electronics, high performance compute, cyber security, all of these areas represent huge opportunity where the world today is almost at the same starting line.
We believed now that the space sector is not something that you can contain within an organization structure called ISRO, government alone, but it has to have an expansion to the non-governmental actors and private. This is strongly believed by our government. And this belief made us to declare the space sector open in 2018. The Prime Minister did that. And subsequent to that, the announcement came that the space sector reforms started. See, you should all realize that we in ISRO, we were actually struggling. We were not having a method by which to engage with the private company. You must understand that we were said to be very secretive, very elite. You don't disclose anything. You contain all the new technology. Don't even tell anybody. Don't engage with private people. This is going to be a threat for the nation. You know, all these narratives came. And we have to understand that this has to change in the mindset of the people. We must say that the whole of the work done by private entrepreneurs in this country is also national. I think this change of concept has to happen. And it is also true in case of technologies which are critical, like defense and space. They are equally should be accessible to private. And this is a policy shift that happened within the government, within the belief system of the political ambience. And that has been created by our Prime Minister.
Okay, so that's the latest commentary coming in, but at the bottom of your screen there is what GM Financials is saying, and maybe part of the recovery can be attributed to that. They're talking about how the impact of whatever has happened in terms of the business is not material for the financials. So that's one stock that you should have on your radar, and no material divergences were found and no governance issue is there whatsoever. So that's the latest commentary coming in. But the other stock I wanted to talk about was Max Healthcare. That stock is up around 5%. My colleague Anurag will be joining us shortly to talk to us about what's the latest, because of course this flip-flop was happening, whether those CGHS prices will be regulated and put across the board all private companies. But now we understand that the hospitals have come together and made a representation on the same. Anurag, tell us what you're picking up on this story.
Association of Healthcare Providers, a body of small and mid-size private hospitals, also moving to Supreme Court in the case where Supreme Court has asked central government to finalize standard rates of for hospital treatment. So the Hospital Association today only, as per our sources, are moving to SC, and they will also become a they are willing to become party in this case to put forth their points, because as per Hospital Association, the CGHS rate, if government if center agrees to apply CGHS rate, it will not be feasible, because so hospitals think that there is no scientific data for the CGHS rate, and CGHS rates are applicable to only 500 to 600 hospitals, and across the country there are more than 50,000 hospitals. So there will be no rationale to implement CGHS rate. On the meanwhile, there is a hospitals think that they can agree on the rates related to the insurance companies. There are a certain agreement between hospitals and insurance company. So these type of standard rates can be applied, so they can put forth in their plea. On the other side, as per our sources, insurance companies through General Insurance Council will also become party in this case because Supreme Court has asked Central Government Union Health Secretary to come up with a standard rate for medical treatment procedure across the states in 6 weeks. So 6 weeks time has been given by the Supreme Court, and if government doesn't come up with a standard rate, Supreme Court may think to implement CGHS rate. So after this order, we have seen a lot of pressure on hospital stocks, and hospitals are also worried. So now going ahead, we'll see that hospital association are also willing to become party in this case. Insurers will also become party in this case, and insurers are also agreed to give their own data because insurance companies have agreement with more than 40,000 hospitals for their cashless treatment. So for cashless treatment, hospitals and insurance companies come up with an agreement to give the cashless treatment. So insurers are ready to share that data also with the government. It is expected that Union Health Secretary is also meeting all state health secretary to go ahead in this issue where Supreme Court has asked government to come up with a standard treatment rates in hospitals.
Right, sure, Anurag, we'll leave it at that. Let's just bring up some of these healthcare names, the hospital stocks in particular. They've actually seen a bit of a rebound come in. Vinith, I don't know if you've been tracking this entire story, still pretty much work in progress. But does it seem like much of the damage could be behind the hospital names, the stocks that is? Vinith, I think you're on mute.
I would want to be still wary on where they're going because I think the valuations are high, and would like to see how this thing pans out before giving any kind of commentary on this. It still remains to be a watchful scenario because what kind of regulations and limitations that come from on the pricing front can severely impact the growth.
Okay, so that's a take coming in, of course, on the hospital sector. We'll try and reconnect that line with you because it seems to be a bit patchy. But Pidilite is, of course, one stock that I want to discuss further. What's your take, Kunal, on Pidilite scaling fresh highs?
So yeah, I think it's coming out of a consolidation. The last 2 weeks, the stock was into a range, 27, 75, 80 as the upper end of the range, and closer to 2,650, 660 as the lower end of the range for Pidilite. So it's a strong price volume breakout. In fact, the volumes today are almost at a 1.5 odd month high for Pidilite on the cash side. So that itself is another positive sign. We could be now looking at this 300 to 400 point consolidation being replicated on the upside for the stock, which means from current levels of 2,800, we should now be looking at 3,000 to 3,100 as a target for the stock.
Other than Pidilite, of course, there's Bajaj Auto also, which has sprung up. It's, by the way, now the top Nifty mover. It's a solid 3.5% of a move that you're seeing on the stock price. Of course, there were comments from Mr. Bajaj himself saying that perhaps 12,000 is the fair value for Bajaj Auto, and clearly the stock in a hurry to perhaps lap on to that level. But Vinith, what is it that you're making of the two-wheeler space, as intense the competition now may be, and of course from the upcoming EV IPOs too?
So quite bullish on this space, and we like TVS Suzuki. We think they've got the best portfolio which is positioned to take on the EV juggernaut as well as the growth of the two-wheeler space. They're both in scooters as well as in motorcycles, and we think they have a very, very healthy product portfolio, good overseas business also, and that puts it in a very sweet spot.
So TVS Motors in a sweet spot given the kind of portfolio they have, but the IT stocks seem to be breaking out a bit as well, Naresh. HCL Tech, a TCS, Infosys, if I have it right, they are sitting at the highest point of the trading session. Any IT bets, Naresh?
So I would expect some bit of a bounce back in names like LTI Mindtree, which have been in a drift lower. So that's a stock which has corrected quite a lot over the last few weeks. So that's a stock which can bounce from 5100, 5150 towards 5400, 5500 levels. So that's one. And on dips, TCS has been a relative outperformer. So that would be one more stock to look out for dips. But at current levels, LTI Mindtree looks interesting.
Okay, so LTI Mindtree from the entire IT space is something that you like. Vinit, what about the private banking names today? For instance, you have Kotak, ICICI, Axis, all doing quite well. But how confident are you about these moves that we are seeing in the private banks? Because it's been one step forward, two step back for them. They have been pretty much sideways. How do you see the year panning out for some of these private banking names?
If you see, ICICI Bank was definitely the leader among the private sector banks. That broke out around the 1,000 odd levels and it has started moving up. So I think the worries around the private sector banks is over discounted. And I think that, there's a good surprise waiting in the short run with a nice move happening over the next a quarter or two as they play catch up with the PSU banks since they have been very laggards in the run of the bank stocks.
Okay, that's some of the private banking names springing up quite a fair bit in trade right now. In the meantime, of course, Bharti is the one also which is scaling up quite smartly. In fact, it's on its way to actually, hit that 1,200 rupee per share mark. A solid 2% of a move is what you're seeing on that stock. We were just flagging off the strength in Bajaj Auto, but look what's happening on an M&M. Titan has sprung up nearly about 2%. In fact, all the Tata Group names, starting off with Tata Chem, Tata Consumer as well looking good. TCS2 has actually sprung up about 1.5% right now as we speak. Naresh, just wanted your sense on the charts of both Bharti as well as M&M.
So Bharti looks very interesting. The stock has given a breakout a day back out of a triangle and a flag formation above 1150, and now is in touching distance of hitting a new all-time high, which is closer to 1200. And the stock has this tendency to go through an uptick, then a consolidation. The last few times, whenever it broke out, it made another 8 to 10% move. So still looks positive for a target price of 1250 to 1300 in the short term.
Point taken. For now, we are sitting at fresh record high, so we're closing in on style because 22,484 is where the index is, and of course, the bulk of the rally has happened in the last 2 hours, 1.5 hours or so. Bank Nifty actually has cooled off. It's the rest of the markets that has managed to pick up pace because the private banking names are off the highest point of the trading session. But as we were pointing out, it's the likes of Bajaj Auto, Bharti Airtel, Sun Pharma, which have actually managed to participate, and that's the reason we are seeing that rally. And also, of course, from the broader markets as well, there are a lot of names which are actually perking up in the last few minutes. Alok Industries, Zensar Tech, Anatco Pharma. Some of these names as well are doing quite all right. But Vineet, if I had to ask you, one high conviction idea that you have at this point of time, or one high conviction theme, whether it's urban consumption, whether it's anything else as well, which is that one theme or stock that comes to mind?
I think Adani Enterprises as a stock looks very, very good. It's been consolidating very strongly. I know we are expecting a lot of good news to flow through. The copper plant is going to be starting this month. The wafer plant is active in the subsidiary Anil. And, the airport will obviously get commissioned within the next 12 months. So I think there's a lot of positive traction news coming through. They've just delivered 900 Hermes planes. So I think they're in a very, very strong sweet spot. All aspects of the business doing really well. And I think they're slated for another 20% run.
Okay, so Adani Enterprises is clearly that high conviction buy, but what are the BTSC trades from our chartists then? Kunal, what's the buy today, sell tomorrow idea?
So I'll go with Infosys as the first stock to suggest as a buy. Now, interestingly, the stock has formed a bullish hammer pattern on the daily charts. So that could be a very strong indication that a near-term bottom could be in place for the stock. 1700 as a target. Stop loss could be kept at 1550. And PNB is the other stock from the PSU lot, which has been looking very attractive. Earlier, I had flagged targets closer to 134 for the stock. So the stop loss remains the same at 124. Would look out for targets on the higher side, closer to 140.
Okay, Naresh, what about your BTST idea?
So first would be a buy on Bharti Airtel with a revised stop loss at 1180 and a target price of 1220. The second would be a buy on Tata Communications, showing a lot of relative strength for the last 3 sessions at all-time highs now. Stop loss at 1970, target price of 2008.
Okay, on that note, gentlemen, we'll let you go, Vinit as well as Naresh and Kunal. Thanks so much for making time and speaking with us today. Well, last 30-40 seconds left for the market and last 30-40 seconds for that big interview which is lined up as well with the RBI governor. And we are clearly excited about it and the markets too. So 122 points higher for the Nifty. The advance decline ratio could have been a lot better, right? There's just 400 stocks advancing to 900 stocks to 1900 stocks declining. But that's the kind of drubbing that we see in the broader markets of late. But Bank Nifty managed to outshine itself. So 0.8% higher on that one. Individual names: Bajaj Auto, Bharti Airtel, Sun Pharma, Kotak Mahindra Bank, ICICI, HDFC. These were the big gainers. And on the losing side, Mahanagar Gas was stock in focus, IFL Finance, Capri Global. You also had JM Financial, Force Motors. These were some of the names that we are watching out for. Tata Chemicals, of course, ended the day in style with a 12% gain, but that's how we are wrapping up the market, 22,482. But don't go anywhere. When we come back, there'll be that big RBI governor interview lined up for you on the other side.